Welcome back. Well, the cues are not the most optimistic or positive, considering the kind of inflation prints and other data like the retail sales data that we're getting. So on the macros, a little iffy, but stocks are doing their own thing, and the US had a good close. We're getting the sense that we'll probably start out positive as well. So let's take the conversation forward. We have Ajay Bodke now joining in to talk about fundamentals, a couple of ideas as well, and how he's reading the market. Ajay, good morning. Happy Friday to you, and great to have you on. I want to start with one specific stock. I don't know if you've had a look at it in the past or not. This is Bharat Forge. A lot of news has been coming in. I mean, they're operating in a sector which is very hot, defense. Yesterday, they announced tie-ups with this UAE firm for more defense systems. What are your views and thoughts on Bharat Forge or some of the other listed Kalyani Group entities?
Good morning, Surabhi, and thank you for having me. I think I'm very constructive on the entire castings and forging sector. I think all the obviously led by Bharat Forge, and the main force multipliers in the medium term for the company, I feel, will be, in addition to the defense sector, also the industrial sector. Because till now, I think the focus for Bharat Forge always has been on the automotive side and the tremendous spread that they have in terms of revenue streams from Europe, America, as well as the rest of the world. But what is overlooked is the fact that the company has been strongly emphasizing that over the next 3 to 5 year term, the focus will shift, in addition to having the focus on autos, on industrials. And there, I think, we are seeing multiple growth drivers from sectors such as oil and gas, defense, railways, heavy engineering. So these are the sectors, where as the capex in India keeps on picking steam, as well as orders from Middle East also start streaming in, I think Bharat Forge will have large orders coming from these streams. In addition to, of course, I think the pole position that they enjoy in the defense sector. So I think Bharat Forge remains one of the strong picks for me if I take a 3 to 5 year perspective.
So Bharat Forge is one of the stronger picks with a 3 to 5 year perspective. Also, let's not forget that the North American business, they have about 12 to 15% exposure in that business. The Class 8 truck orders that we got in the month of August, they're sitting at almost a 5-month high. So not only are they picking up in defense, they're putting more money in EVs, but even their, bread and butter business, which is the CV segment in some of the export markets, continue to pick up. So got that. Ajay, hi, good morning, and thanks for joining in. I wanted your thoughts on what's happening with L&T, because, this morning you have a report from Bernstein where they have a target price of 3,268 on L&T. That's a big upside to the current market price, and this is despite the kind of rally that we've already seen. Your thoughts here for someone who's missed the bus on L&T? Is there still more to go?
I think there's still some more legs insofar as rally for L&T is concerned. The kind of order flows that the company is talking about from the international markets, especially in the hydrocarbon sector, with the emphasis from the GCC, I think, and these orders are at a slightly higher margin as compared to the legacy orders that the company has been getting. And one of the concerns that analysts had is why aren't the margins in the core core business, the EPC business, perking up? And that is because the company has been sided with some of these old legacy orders, which basically are getting out of the way as the company's execution is picking up steam. And going forward for the next 3 to 4 quarters, I think one will start clearly seeing an upward trajectory in the margins for the core sector. So I think, and plus all of us are aware about the Government of India's emphasis on infrastructure capex, mainly railways, roads, power transmission. And the company is the major beneficiary of that, in addition to the emphasis on defense. So I think L&T, again, in the EPC business, I would say L&T, Siemens, and KNR Construction are the 3 companies that I would be constructive on.
Got that. By the way, Ajay, in a bit from now, we'll have the management of Renuka Sugar joining us, right? And we'll understand from them what's going on there, both on the sugar and ethanol space. But just your thoughts on this space. One is the regulatory side of things on sugar, which is, even though there is an upward kind of pressure on sugar prices, will sugar prices be allowed to rise? Many believe that will not be the case with elections, etc., coming up. Yesterday, we had a note from DAM Capital, which they said, well, prices will stay strong, And then, of course, there is the ethanol side. which remains strong and is like a longer-term story, which will continue to play out. What's your view here, and what are your bets?
I think, as you very succinctly put it, there are pulls and pressures that the sector sort of is undergoing. I think just yesterday I came across the Brazil production numbers, which are up by roughly, I think, between say 7 to 8%. Brazil, mind you, is the largest global producer of sugar. So I think on the headwind side, I think globally, I think if you were to look at sugar prices, I think Brazil will play a key role. But in India, which also was a large exporter last year, the government will simply not afford to allow the inflationary pressures which are already entrenched, especially on the food side, to get any worse, especially with elections now coming in the crucial Hindi heartland states a couple of months from now, followed by Telangana. So I think, so in my opinion, I think the government's regulatory pressure will ensure that there is a cap insofar as the price increase is concerned. The government has already come down quite heavily in terms of the stock limits that it has imposed on the sugar mills. So I would sort of be positive. At the same time, we always be looking at sort of the valuation, whether the valuations become too frothy. But I think there's still some more leg to run, in my opinion, because the rally has just sort of started. So Balrampur, I think, is my preferred pick in case of sugar sector.
Okay, so Balrampur would be your pick in sugar. Got that. I mean, just coming back to yesterday's news, Ajay, yesterday Bombay Dyeing made huge headlines, right? 5,000 crores is not a small sum of money. Obviously, Bombay Burma was also up and about. What did you make of this transaction? Any thoughts on these Wadia Group stocks?
I think the market cap of Bombay Dyeing was significantly lower, than the total sale proceeds that the company would be getting on selling 22 acres of prime real estate at Worli. And the company still holds large parcels of land in the Mumbai metropolitan region. It's one of the largest landowners traditionally, historically, in the Bombay city. So I think, but then I think this is, in my opinion, episodic, because the main core business of Bombay Dyeing, I think, has been a concern, has been loss-making. The company has not really been very efficient in terms of its main operations. So the market would, in my opinion, discount this as a one-time gain, this sale. And once it factors in that, I think it will be business as usual in terms of markets focusing on the core business, which unfortunately I think isn't doing too well. And that's true for, in fact, almost all the companies for the group.